as I let y'all filter in, get myself together. As everybody filter in, y'all come on in, y'all come on in, y'all come on in. Good morning, good morning, good morning. Um, Today not gonna be a long one. Today gonna be a quick one. I got some things I gotta do. Got some things I gotta do this morning, so we gonna go ahead and get into it. Let me get the pleasantries out of the way. Um, if this your first time tuning in to Tim's Tidbit, I like to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome and give you a hearty thank you for always, pulling up, supporting, tuning in, whatever you want to say. Yeah, I'm liking the new background too. I like the new background too. I'm glad y'all voted on keeping this one. For those that don't know, I changed the background because I started recording the pre-recorded videos. I totally revamped everything yesterday, going back to the old Tim's Tidbit style where I got slides. You're going to be able to download the slides for free if you want to download the slides. So I revamped everything. I started re-recording yesterday. But yeah, and this gonna be the new background. Spidey said he like it. Y'all see Spidey hanging out back there, his new spot over there by the window. Speaking of the window, let me open the window up. Let me go open the window and let the light in. Let the light shine in. There you go. Open it. There you go. I had to open the window up and let the light shine in. Get my soul glow together. I'm all over the place this morning, man. But anyway, so yeah. If you don't know who I am, my name is Timothy Lee Rogers. See, I get on Al Gore's internet every single day, and I talk about the price action, dealing with the ES, because I primarily trade the spot. And speaking of action, this is the overnight price action for November. It is now. It's the first of the month. Wake up, wake up. Cash your checks and come on. Wake up for November the 1st, 2022. Yeah. Welcome, welcome, welcome. Hey, all I do is just share my thoughts on how the price action move, where the price will most likely go, what liquidity it will attack next, how to get into trades, how to get out of trades, just overall strategy, everything about the stock market and trading and investing. That's what I do. I do it for free. All thing I ask you to do is click the like button wherever it is on your screen. If you would like to join our free Discord, I think there's a couple slots left. Before I say that, let me check that. Let's check it. I think there's a couple slots left. Let's go see. Matter of fact, let's see together. Not 2 slots left. There are 2 slots left. Let me verify because there's 97 clicks on the muscle. So there's 2. Chris Bailey, you're holding up a slot. You're not in. Chris, if you're on the live right now, you have to go click that muscle. Server settings, invites. They're gone. Nope, there's all of them are gone. So Chris, and there's the 2 right there. There's the 2 right there. I need to let them know they're holding up slots, or I'm gonna have to kick them out. They got until tonight to click that muscle. If you're on here right now, make sure I'm sending them a message now. But if you're on here right now, Chris, or what was the other one? You have to click the muscle to get in. What was the other one? Pecan. Sound like the sound that I be making. Pecan. You got to click the muscle. All right. So there's no slots left for, as of now, there's no slots left for the Discord. All the slots have been taken. So ignore everything I was saying about the Discord. because we only got a limited amount of slots that people can get in. And I'm not going to be that guy that says, hey, guess what? For limited time only, we're letting more people in. Won't do that. So Chris Bailey, 365. If you're on here, if you're watching the replay, come in and click this muscle. You're not in the Discord yet. You're just in the welcome section. You're holding up a slot for somebody that may really want to get in. Pecan, come down here, click this muscle emoji right down here. When you click that muscle emoji, the welcome, the important and welcome will disappear. Then you will see the member section. Once you click that muscle, you'll see the screenshot section. You'll see the chat section, right? So make sure you click that muscle. You got until tonight at 6:30 when we go live to be done click that muscle. If you don't click that muscle by tonight, I will come in here and click and kick Chris Bailey and kick Pecan out so that somebody else can get in, or they can just go back in and click and do it the right way. Anyway, that's that. The overnight price action. Oh, wait a minute. I ain't holler at my folk. Who in the chat, man? Who in the chat? What's up, Kelvo? You in here early? You in here early? Good morning, here to learn and share. Good morning to you. The birds are chirping. They're right out that window over there. Tweet, 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 tweet. What's up, FC? What's going on? What's up, Kareem? What's up, Angela? I don't see Valdez, but we got Angela in here. What's up, Laverne? What's going on, Rhonda Green? What's going on, Michelle Tucker? Cool it now. Hey, watch out. What's up, Cool it? My sweetie in here. Hey, baby. What's up, Prayer Kid? What's going on, Sanjay? Good morning, my arch nemesis. What's up, Robinson? What's that about? I see more numbers than I see names, but them the only names I see, so we about to get to it because I got some stuff I got to do today, man. I got to go pull the spare tire down off the truck, take the flat off, pull the spare tire down, put the spare on, then drive the truck up there and get replacement tires. There's Valdez. What's up, Valdez? Welcome. Welcome, Valdez. You see Angela's here. We have Angela Valdez in the building. That would never get old to me. Yeah, baby. All right, the overnight price action. We have eventually got up and taken out that buy side liquidity that we was talking about that we didn't take out the other day, this previous high from Friday, when I was like, we gapped down, we had the void, there, and we had the previous high that we had not taken out. And I was like, that was a we came too close. We've come too close to this high right here to not want to take that high out. So I suspect that being taken out relatively quickly because we're inching closer and closer to that high, right? This getting to this high right there will complete taking this high will complete this portion of this market maker buy model right here, right? This portion of it. And then it will be to be determined if we're in a greater market maker buy model of getting back up to the September 13th high, right? But now getting back to the September 20th high will complete this bottom portion of this market maker buy model, right? Market maker buy model. We're still sitting here. We've officially disrespected this order block over here. We kind of disrespected it already because we got all the way up to like the wick over here, and now we've totally disrespected it. We've gone above the wick of it, right? So it has been determined that that order block has been officially disrespected. Just peeking at where we are overall. Okay, so we've taken out Friday's high. Now, let's go back down to the hourly and see what's going on with the overnight price action. Overnight, we just went straight up. Man, Plain and simple. We just went straight up overnight. This is the 1600 close yesterday. This is the opening of today, right there, the 1700 candle. I mean this is the opening of today right here, the 1900 candle. This is the after hours candle. I'm sorry. This is the opening candle here, the 1900 candle, because it opens at 6 o'clock. And on trade, on Ninja Trader, the candles are named like I'm used to it being named. That when the candle closed, that's the, what I'm saying, numbering of the candle, I guess you would say. I said name, but numbering of the candle. So we just went straight up. Nothing can stop me. I'm all the way up. We seem to have made a beeline almost. We made an order block here just before midnight and just after midnight. So on the midnight candle and the 1 o'clock candle, we formed a little order block. On the 4 o'clock candle, we traded back down into that order block, came roughly to the mean threshold of that order block. Let's measure it out and see. Mean threshold of that order block is 38.98 even. And this candle right here came down to 38.98.25, right? Came right to the mean threshold of this order block right here. One tick off from it, but close enough for government work, right? Moved up and formed another order block. It's trading very technical because we made an order block here, and then this down close candle traded into that order block and then became an order block itself. And then this candle here traded down into that order block and took off again. So a lot of times, well, most of the times, when you get an order block that has traded down into an order block and taken off, that makes it a strong, that even when you have a down close candle that trades into an order block and then we take off from it again, that intensifies, if you will, or heightens the probability of that down close candle becoming an order block also. And then that played out as you see here. This candle here, this up close candle at 6 o'clock traded down into that order block and then took off again. And we did a lot of work inside this gap down, because we did a lot of I say we did a lot of work because we did a lot of back and forth. We did a lot of back and forth here. We didn't just, even though these are all green candles going up, look at the wicks, right? We came up into it, traded both ways right there, right? So we offer buy side and sell side for just over 50% of this void, of this gap, right? So then so we traded both ways there. This is like a free play candle, right? This next candle, right, we opened up here and went up to the top, but then we came back down to offer, you know what I'm saying, sell side and buy side over there, you know what I'm saying? And then we offer sell side and buy side at the top. And then we came here again, offer sell side and buy side, sell side and buy side all the way to the bottom. So we pretty much done rebalanced that entire area right there, right? Even though they're all green candles going up, right? There's really no liquidity void. There's no liquidity void because if you notice, the candles are overlapping all of the bodies of the previous candle. So we're offering buy side and sell side all the way up, even though it's 1, 2, 3, 4, 5 green candles in a row on the hourly. It's like we're trading both ways with like really long wicks. So there's really no buy side, and there's no buy side imbalance here, in my humble opinion. Now that we've balanced out this, what's the name? Let's see if this acts as support and pushes us up, or if we just peter on out and come back down and start heading toward some of this sell side liquidity that we been leaving behind back here. I would really want to see what this price action going to do today, for real, because all we did was go straight up. We just went straight up. Yesterday didn't give me any clue of what we were going to do, right? This was Friday, this closed right here. This was Sunday and Monday. All these from this 1600 candle right there all the way over to this 1900 candle there. That's Sunday and Monday, right? Absolutely nothing. Gave us absolutely nothing. Overnight, we did a lot of moving overnight. We did more moving overnight straight up than we did all of Sunday and Monday. Right? Let's check that. Let's check that range. Let's check that range. So from the low to the high, uh-oh, where did my screens go? Where did my screens go? I hate when I do that. All right. 39, 27, 75 minus 38, 81, 25. 46.5 points. Roughly 50 points overnight. Roughly 50 points overnight. And that's greater than we did. Let's see. 39, 14, 75 minus 38, 72.50. 42 points. Yes. We did more overnight than we did all of Sunday and Monday. As I thought. Let's see how this play out today. Again, let's go see what's on the economic calendar and holler at Spilene. That's the overnight price action. We just went up. You know what I'm saying? Made 2 stops, respected 2 order blocks, respected that order block, respected that order block, and kept pushing up. So right now it's trading very technical. Let's see if the technical trading continues. What am I looking for? What am I looking for? Not what I'm looking for. Not what I'm looking for. What I'm looking for. For anybody who don't know about econoday.com, econoday.com is my website of choice for getting my economic data. You go to econoday.com and click on view full calendar. Today is Tuesday the 1st. At 9:45, we got PMI manufacturing final numbers. At 10 o'clock, we got ISM manufacturing index numbers. Construction spending at 10 o'clock and JOLTS numbers at 10 o'clock. So we got a lot of information coming out today. Today's numbers are for October for the PMI final numbers is for the numbers from October. Right? Consensus is 49 point, very tight range. Very tight range. The final manufacturing PMI for October is expected to hold at 49.9. A reading indicating the most marginal contraction. Okay, then. So it's very wide range. I've never seen it before where the consensus and the consensus range were all the exact same number. I've never seen that before. It's the first time for everything. ISM manufacturing index at 10 o'clock. Consensus is 50. Consensus range is between 49 and 50.7. The ISM manufacturing index has been gradually slowing to nearly break even to 50.9 in September, which was the lowest, which was lower than expected. October's consensus is 50, is exactly break even. Let me see what it's like. They used to tell you They used to tell you what the market like about it. Tracks volumes, and these gonna be October numbers too. Importance, interpretation. The bond market rallies when it's weaker, falls when it's stronger. Equity markets prefer lower interest rates, could rally with the bond markets. However, a healthy manufacturing sector indicated by a rise in ISM bodes well for corporate. So no. Indicates contracting manufacturing sector GDP growth index falls below the base regarding between suggests manufacturers declining. GDP is still growing but slowly. So you want to be above 50. So you want to be 50 or higher. Pretty much. That's what I'm taking. You want to be 50 or higher. They expected it to be right at 50. 50 or higher means a good thing for equities. Got it. Check. The big dog on the block is tomorrow. FOMC announcement. This is when the Fed are going to announce the what's the name? The consensus is 75. As we saw on the Fed Watch tool, I feel fancy now because I figured out how to go find it for myself. Go to cmegroup.com, go to markets, go to interest rates, scroll down to the Fed fund, click view Fed Watch. Ta-da! 87% says it's going to be a 75 basis point hike, and 12% says it's going to be a 50 basis point hike. The current rate is between 300 basis points and 325 basis points. So pretty much between 3% and 3.25, right? If you add 50 to it, that's where this number comes from. That'll be 3.5 to 375. If you add 75 to it, it'll be 375 to 400. That's where the numbers come from right there. I feel fancy because I found it on my own yesterday. No thanks to somebody. Talking about you. Yep. Nope. Don't move. Talk about you. Anyway, while we on Al Gore's internet, let's go look at Spylene real quick. Y'all know who it is. We even wrote a song for. Y'all sing it with me. Spylene, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Look at Spylene. Whoa. You about to get what's that, like close to a $4 gap up? Yeah, that's almost $4. That's like 3 cents away from $4 right now. Oh yeah, that's right. We just looked at the ES. We went up all night. We just like from the close to the open. We just went. Nothing could stop her. She's all the way up. Let's go down to hourly candles on here. See, look at that. Gap up. Pre-market still going up a little bit. We've taken out that high that we were last week's high that we were looking at, of course, because we just said that over there on the spiggity. On the spiggity. This, which one on the, see, these calendars be different, so it's kind of hard for me to judge which one was the actual candle on the ES that I was like, we came too close to it to not get it. And put this on the daily calendars real quick. See what day that was. No, September 20th on here. It's not that far above. So let's see what it is on the spiggity. See, September 20th on the spiggity is way down here, right? So we're pretty much in the same area. That's coming back up to this what was this mitigation block right here. This mitigation block is pretty much the same area. We got a mitigation block on the SPY right here. What do we have on the ES? Yeah, we got the same mitigation block there. Yes, we got the same mitigation block there. So we just don't have that swing high on the SPY, but we got the mitigation block right there. We got the weekly fair value gap there. We got the other PDAs, but we just don't have the swing high on the SPY. The SPY just don't have the swing high because of the trading difference, right? The trading difference that we have. So we got the mitigation block. We got the week. This is a weekly order block on here. I said fair value gap. That's an order block. I'm tripping. It's orange. The weekly order block, the daily mitigation block, and the same thing over here. The daily mitigation block, and then the weekly order block. We got the other PDAs on the SPY. We just don't have the swing high. Again, we're coming up here into a lot of traffic. Yesterday, we was like kind of chilling and, you know, trying to kind of making it seem like, hey, we might possibly come down and make a Tuesday low and bounce off of this traffic down here and go higher. But now today, we're looking like we're possibly going to make a Tuesday high and maybe bounce off of this traffic up here and then come down, right? We've been running for a while, so it would be healthy for the market to come up here and hit this mitigation block. You know what I'm saying? This volume imbalance, this order block. You know, y'all remember the PIMDAS, right? Y'all remember the PIMDAS? Let's go get PIMDAS real quick. And then we're going to probably wrap it up because the market getting ready to open and I got stuff to do. Looking at PIMDAS, for those who don't know, it's just the ICT PD array matrix. And I like to call it PIMDAS. Looking from, when you look from equilibrium up, these are the PDAs you looking for, right? The old highs would be the farthest away from equilibrium. The mitigation block would typically be the closest to equilibrium. You know what I'm saying? This is the typical order that you are running to them going up to the top of your dealing range. This is the typical order going down to the bottom of your dealing range. So the first thing you look to hit or react off would be a mitigation block. If it's not present, then you would look for breakers. If it's not present, you would look for liquidity voids. If it's not present, you would look for fair value gaps. If it's not present, you would look for order blocks. If it's not present, you look for rejection blocks. If you're not present, you look for old high because it's like getting farther and farther away from equilibrium, right? And that's the order of it here. And right now on the spiggity, why can't I move this? Right now on the spiggity, we're coming up into a mitigation block right here, right? This is equilibrium, right? We're going up. Nothing can stop me. I'm all the way up. Boop! Hit this mitigation block right there. All right, because we came from equilibrium. We're pushing up. We came up. We consolidated here. Then we're pushing up. Right? We're still pushing up. Now we're coming to this mitigation block right here. Boom. When you hit that mitigation block, what are we going to do? Are we going to sell off and die? Or are we going to come back to this order block and then push up? That's the $1 million question. Trade what you see. We don't know what it's going to do, but we have the little breadcrumbs to help us get in and out of positions if we need to, help us manage positions, help us. The market is open. The market is open. The market is open. If you got to go trade, I'd like to say thank you for tuning in. I'd like to ask you to please hit the like button before you exit. If you're not going to go trade live, if you're just going to watch the market, please take copious notes and study. I'll see you tonight at 6:30. Tonight might be a quick one too, because I got to go help my nephew shoot some scenes for his music video. So again, thank you for tuning in. Now I'm gonna finish this thought I had and then wrap it up because I got to pay my bills, I got to change my tire, and I got to go. Yes. What is the mitigation block? You must be new here. I appreciate the question though. The mitigation block. You know what? You're wait a minute, Robinson. Please tell me you ain't no kin to Robinson. Robinson. Please, cause your picture look like you in a car, and then his picture look like he in a car. Please tell me you ain't no kin to Robinson. But anyway, the mitigation block is when you have a low or a high, like this low right here that we made, this swing low did not break this swing high, and then we traded back down through it, right? So this last down close candle right here, that makes that a mitigation block, right? The difference between and the way to remember the mitigation block and the breaker is when you have a low swing low that breaks a swing high and then we trade back through it, that would be a breaker. But if we have a swing low that don't break that high and we trade back through it, that's a mitigation block right there. That's the mitigation block. That's the difference between the mitigation block and the breaker. But the mitigation block and the breaker, they look very similar. But the easiest way to figure it, point it out, is when you get the swing low, if you don't go back up and break that swing high like that, then that becomes a mitigation block right there, right? So that's that. That's that. What was I saying? I don't know. I lost my train of thought. But anyway, that's all I got. Who else done popped in here? I see Margot done popped in here. What's up, Margot? If you're still in here, appreciate you. Divadio, what's going on, my guy? Stacks, what it is, Stacks? What's up, Audrey? What's going on, Christina? Market pushing. Yeah, we gapped up, mammy. What's up, Regina? And then is it Tapisha? Is it Tapisha? Is that Tapisha? Am I pronouncing that right? You're welcome here to learn and share. Hey, that's all I got. If anybody else got a question, feel free to drop it in. I'm getting ready to pay some bills. Got to pay some bills. Then I got to go out there and change my tire. Well, take the spare down, put the spare on. Then I got to go to the store and get 2 tires for the back of the truck. I sure wish I had my pump still so I could just pump the tire up and then drive to the store. That really sucks. I don't feel like taking that tire off. Hey, I was about to say something. I can't remember. I lost my train of thought. Let's see what the market doing real quick before I get out of here. We pulling back from that taking that buy side. Let's go all the way down to 15 minutes. Okay, we came down here to this fair value gap. This 15, we didn't get quite there. Came close to that 15-minute fair value gap. We got this humongous order block right here. We got like 50 down closed candles, right? Let's look at it on the hourly. There's no down closed candles on the hourly. There's no down closed candles on the hourly. So go back to the 15 minutes. So on the 15-minute, we got like this big humongous order block right here that we just traded back down into. Looked like we might hit the mean threshold on it. We got all the candles. Yes, we did. Right back to the mean threshold of that huge order block right there. The mean threshold is 39.1325, and we came down to 39.1325 exactly. Came down to the mean threshold of that 15-minute order block and bounced back up. After taking that buy side, we are in a go to daily real quick. All right, so in our overall dealing range, we are still in the discount of the premium. We are in a slight premium in the overall dealing range, but right now the algos are not operating at the current time of the overall dealing range. So let's drop down lower and see what we got going on. Drop down and get your eagle on, girl. Drop down and get your eagle on, girl. So for today only, from this candle only, let's drop down and see what's going on. Put it on 15-minute candles. So where's my it's out here to the side. Let's put this on 12 a.m. Let it move over so I can see what's going on. Why? Okay. So this is equilibrium for the entire open of this day. So for the entire open of this day, equilibrium is at 39.04. Let me check the what's the name? The dealer's range. So get out the way. Golly. I got so much stuff on my screen. All right, so this right here, that's the pink line I just put on there. That's the central bank dealer's range from wick to wick. And that's the central bank dealer's range from body to body. Right. So that's wick to wick. That's one standard deviation from wick to wick. That's one standard deviation from body to body. So we traded up to one standard deviation, pushed down a little bit into there. Let's see how high we can go, because it doesn't seem to be giving us anything. Okay, so this is the entire dealing range for the day, and then splitting this in half. Let me do this real quick. Nah, can't do it like that on here. I can do it on Trading View. So I'm just gonna put this at 39.0450. 39.0415. For anybody who don't know what I just did, I just found the equilibrium for the premium. So we came down into a discount of the premium. For anybody who not following me, and I just lost you on what I just did, I had my Fibonacci, right, anchored. Fibonacci was anchored at the bottom of the full day of today, the full daily candle of today, right? And this is equilibrium. As you all know, you can break the dealing range down into quadrants. To break it down into quadrants, you just put the Fibonacci from equilibrium to the top, or from equilibrium to the bottom. Since we're up at the top, I put it from equilibrium to the top. So equilibrium is 39.0450, right? So I just moved the bottom of the Fibonacci up to 39.0450, right? So that's going to put the zero right here at 39.0450. Boom. Now the zero is at 39.450. So now the premium section, the premium for the premium of the premium is from 39.16 up to 39.27. The discount of the premium is from 39.16 down to 39.04, right? So we came into a discount of the premium, hit this order block, and then started pushing back up. That's what, because I was like, we're not operating off the full dealing range right now. We're just operating off of a smaller dealing range inside the full dealing range. When you have a premium inside a premium inside a premium inside a discount inside a discount inside a premium inside a discount, all of that, the weaving of the web get tangled. Yes. So that's where we are right now, and we're kind of respecting that. Let's see what's a going zone a little lower. Let's go down to the 5 minutes and see what's a going zone. All right, on the 5 minute, we took out that sell side. We took out sell side here. We came down, made relative equal lows. Relative equal lows tend to be a magnet. So we got a fair value gap here. We're doing a lot of wicking around right now. We're doing a whole lot of wicking around, kind of sticking within this the gap. We're sticking within the gap. Let's give it a little bit of time to see if this gap is going to act as support or if it's going to come down and act as resistance. Because right now, it's acting as support right now. Right? Once we got up into the gap here at the 6 o'clock candle, right? We got it. Once we got we got a closure there in it, right? Came back down, straddled the fence. Then once we got this closure right here on the 610 candle, right? We have not got a closure to the south side of it since. We came in here, did a whole lot of work, went up into it, and then now we're still staying within the range of the full gap down. So let's see, give it a little bit of time and see if this is going to act as support, if we get above it and keep pushing, or if we get below it, because these wicks are crazy on these 5 minute candles right here. Every time we come down, we're wicking up very, 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 very strong. But it's like we're stopping in a really weird spot on the 5 minute candle. We're coming down making, we're just coming down making relative equal lows on the 5 minute candle. Like, I know we came down here to, this was coming down to an order block on the 15 minute, but we keep coming back to the same area, and we're not going to a new PDA on the 5 minute. That's why I say it's coming to a weird area. We're not coming to a new PDA on the 5 minute, right? And the lows on the 5 minute candles are getting higher and higher. Let me see what Skinny Mini doing. Skinny Mini, same thing, coming to relative equal low, and we're just wicking back and forth. No clear attack after taking that buy side. No clear attack of any bless you. We got equal lows down here on 15 minute too. Y'all know how I feel about these. When we had these long wicks, we got 19 seconds left on this 15 minute candle. When we had these real long wicks like that, I'd be like, oh, we're gonna go revisit that wick. But let's see how that play out. Hopefully, I ain't gonna hold you. I hope this just end up being like a nothing day for the rest of the day. Since we did so much overnight, look at all this right here. Look at all this we did overnight. I would just love for it to be a nothing day and just chill out right there. Let's look at Spalene. Come on back down to at least 38, 80, 40. come on back down to at least 38, 80, 40, and then just chill out for the rest of the day. That'll make me happy, because that will take care of this not leaving any kind of fair value gap right here. It won't be no it won't be not fair value gap. It won't be no gap up. It won't be no full gap there. There's no fair value gap here between Friday and today, because we already traded back down to that. Just come on back down into this wick, and then, you know what I'm saying, let's just make it a nothing burger day. And then going to FOMC announcement tomorrow. FOMC. Oh, on the higher time frame, thinking about it from the higher time frame, right? Let's hit this mitigation block here. Let's hit this mitigation block there. Right? Yeah. Let's hit this mitigation block and then get a reaction off of it. You know, hit the mitigation block, maybe even hit that weekly order block or this volume imbalance and get a nice reaction off of it, right? And then come in tomorrow and then sell down. You know what I'm saying? Push up, get a nice reaction off of it, like, hey, let's go down some. You know what I'm saying? And then come in on tomorrow, push up a little bit, and then sell down. Because you know how when we come into a premium, right? We're coming into the premium, and then now that we're coming into the premium, right, we're looking for, like, cause let's look at it, right? Let's look at it from here. From, like, you see these candles over here? All these candles over here, right? When we come over, right there, all of those candles right there have been visited right here. All them, like this candle here, right? We came up into this bearish order block, right? This candle right here, wicked above, took out these highs, and then these highs right here, and then pushed back down, right? This candle right here just came back down to equilibrium, right? We closed that equilibrium, right? After coming up and hitting this order block right there. Came into the premium, boom, hit that order block, right? Now that has been taken care of, coming from equilibrium, now we're pushing up. We're looking for an active PDA. The first active PDA that we get to, right, is this high and this mitigation block, right? But this high has already been, this high is part of, you know, this order block and all of that right there. But pushing up, looking for the active PDA, boom, we get to this mitigation block, right? So coming into the premium, looking for an active PDA, boom, hit that mitigation block, get a reaction off of it. Because you know, when you go into the premium, or if you go into the discount and then you get that reaction off of a premium PDA, right? The next candle over, you'll be looking for the continuation of that reaction, right? So that's why I say, let's go up there, boom, hit that, react off of it, then the next day come in and then sell down. But since it's FOMC, that's the technical way of looking at it. Since it's FOMC, it's one of them things where you just got to sit down and wait to see how the market react to this 75 basis points that it looked like the Fed gonna say. And then once they announce that 75 basis points, it's all about how are they gonna be, you know what I'm saying, talking about slowing down the tightening. Are they going, slowing down the interest rate hikes? Are they gonna be talking about, you know, everybody be talking about the Fed pivot and all of that? Like, was it the Bank of Canada or somebody said something about a potential Fed pivot, in the market like took off like a rabbit one day last week. So, you know what I'm saying? Will they say something like that and make our market take off like a rabbit again? One of the things you got to sit back. That's why you don't really like, I don't really like trying to be in a trade when I'm coming up on big stuff like a Fed announcement or something like that. Hey man, I need, we melting off on the 15 minute. Melting off. I was talking about these equal lows right there, and they said, forget your equal lows, punk. Look at this melt off. Forget your equal lows, punk. Let me see what it do. They didn't even get, it ain't even set up no kind of entry for me. The entry was like way back over here somewhere. If it ain't even give nothing on the 5 minute that I would take. It ain't even give nothing on the 5 minute that I would take. I ain't gonna sit here and act like, oh yeah, it ain't nothing on here that I would have taken on the 5 minute. We had a breaking market structure here, right? We came down, we broke structure there, and then wick back up. You know what I'm saying? Broke both of these structures, wick back up. I was like, we coming down and making relative equal lows. So it wasn't even giving me a real breaking market structure that I could trade on the 5 minute. This right here is the first closure below. You see what I'm saying? This 5 minute candle right here is the first closure below a breaking market structure. So this humongous fair value gap right here, right, coming back up to that would be like the first real entry that is giving me, you know what I'm saying, this little funny looking little long wick order block right there. That would be like the first entry that I would be seeing like, hey, let's try to take that, you know what I'm saying? And then if you notice right here, we also got a breaker right there, right? We got a breaker here. This low broke this high on the 5 minute. Then boom, we traded back down through. We got a breaker here. We got a breaker there. We got two breakers, you know what I'm saying, in the midst of coming back up now. We got a 5 minute breaker right here because this low broke this high. Then we got another breaker right there. This low broke this high, right? So now here's the coinky dink. I mean, here's the conundrum, if you will, if that's the word I'm looking for, right? These the kind of things that I don't like trying to trade, because I got a breaker here and I got a breaker there with a humongous fair value gap, right? So I can't trade off this breaker. Why not? Because I got a fair value gap that's this freaking big. And plus these only 5 minute candles. If anything, I would have to try to trade off of this breaker or close as I can to the top of this fair value gap. Because if I try to trade off of this breaker here, it can easily slide up to come get 50% of this fair value gap, or come all the way back up to this breaker, right? That's kind of stuff that I had to learn to stay out of the way of. 15 minute breaker right here. Let me mark this 15 minute breaker and go back to the 5 minute and see. 15 minute breaker right here has a little more weight than the 5. Acting like it's trying to maybe work on a fair value gap. We got 5 minutes left on this 15 minute candle, so it's a long way away from that. 15 minute breaker. All right, took out this we just hit this order block right there. We just came down to a 15 minute order block right here in the we're actually in the discount of the day now. This was equilibrium, so we just came down to this 15 minute order block right here in the discount of the day. Took out this sell side liquidity, hit this 15 minute breaker right there at midnight, at the midnight open level. Should I say at midnight, at the midnight open level. So we're in the, because remember, this was equilibrium. I moved it up. I moved the bottom up to equilibrium. So we came down to this 15 minute order block right there. Boom, going back to the 5 minute. So now right there, that's what I was talking about. This 5-minute breaker. However, like I can't trust that, because now boom, we got a 15-minute breaker just above it. The 15-minute hold a lot more weight than the 5-minute. And then we got another 5-minute breaker that's above that. And then this 15-minute breaker is roughly around the equilibrium of that humongous order block. I mean, fair value gap. Yes. So mean threshold of that fair value gap would be just inside that 15-minute breaker. All right. We didn't get a closure below this breaking market structure right there. But we how much time we got left on our 15-minute candle? Still got 3 minutes left on our 15-minute candle. What was the low of the day? So after midnight, the overnight low was made just after midnight at 38.93.75. We just made a new high on the 8:45 candle, and then now we come back down. We did not take out the overnight low, but we did take out the London low. So we have taken out the London high and the London low. Chop suey day. We took out the London high and the London low. We took out the London high prior to New York. And now that New York open, we've just taken out the London low. All right, took out buy side. Took out external buy side. Pushed back in. Came down here to this order block. And break it out. Give me something. Give me something. 1 minute and 37 seconds left on this candle. Okay. Didn't give me nothing on this meltdown. And let's see what happened. It was trading very technical overnight. Overnight was trading very technical. But now that the New York Open has begun, maybe the technicals are on lower time frames than I'm watching. Okay, breaking market structure here. Everything just overlapping. Set an order block there. It's not trading technical at all. On the 4-bit, ain't nothing trading technical on none of these levels. Yeah, nothing's trading. Zero entries. Zero entries on anything. Consolidation. Drop off. See, that was 10 o'clock. What just hit? What just hit? What was 10 o'clock? 10 o'clock was ISM. Jolts. everything. We had jolts, we had ISM, we had construction spending. The construction spending has hit. Let me go to Forex Factory. Maybe they got everything. Construction spending hit. Jolts. All right. It ain't posted yet. So the PMI numbers was 50.4. Why this forecast say 40.9 and the other one said 50 even? I guess they rounded up. So it was a little bit better than projected. So it was 50.4 versus 50. So it was slightly better than projected for the PMI numbers. That was 945. And then what's name still ain't the construction spend jolts. Okay, the jolts is out now. Jolts still ain't out on here. Still not on there. Jolts is posted now on there. Man, come on. Okay, so consensus was 9.87 million. Actual was 10.7. Job openings fell very steeply by more than 1 million to much lower than expected of 10.10 million. Forecasts are looking for further contraction in September, a consensus of 9.8 million. Trying to figure out if this is a good number or a bad number. Okay, they expected it to be 9.8 and it was 10.7. So monthly change in job openings and offer rates are higher in the report. Period lag. Come on, man. The words jolt stand for job opening. Man. Yeah, I know that. So they expected 9.8 million jobs to be open, and it's 10 million, 10.7 million that's open. I'm assuming that's a good thing because we got a lot of job opens, like a lot of jobs available for people to. That mean the labor market is still strong. In my mind, that's how I'm reading that. But this freaking why investors care won't open up. Let me look at the details over here. Okay, each month release month number of job open measure report actual greater than forecast good for currencies. Actual greater than forecast is good for currencies released. It's related. And it still ain't showing up on here. Oh no, it still ain't. Yeah, it did. It opened up. But it ain't told me nothing. Although lagging, JOLTS provide additional information on the labor market, the payroll survey, and employment situation report provide numbers on net job change. JOLTS break down labor market data, pre-net change, such as job openings, hires, separations. I'm assuming like more jobs available mean a good thing for the labor market, meaning that the labor market is still strong. Now you can interpret this in a couple different ways. If the Fed think the labor market is still strong, they can still go full steam ahead, or the Fed can say, okay, what we're doing is working because the labor market is still strong. We're not hurting the labor market, and they can say, okay, we're working, and that can be a good thing because they're saying is what the Fed is doing is working. So it depends on the interpretation of the powers that be. Do they like it or not? Do they think, oh, the Fed gonna take this and run with it? Okay, 10. See right there, they got 9.75, and then it's 10.7. And then PMI numbers forecast was 50, and this was 50.2. I mean, that's service. Yeah, service PMI was forecast 50. This was 50.2. Oh, that's what the 50 was. I knew something said 50. Okay. Oh, it's still showing consensus. Refresh this report. There you go. That's what the 50 was. Yes. So 50, and it was 50.2. This was the one I read earlier. This was the one I read earlier, I think. Yeah. Yeah, this was the one I was reading earlier when I was like, it ain't really telling me. And I was like, you just want to be above 50, I guess, because it wasn't telling me importance indicates overall factor trend. The relevance of this indicator is enhanced by the fact that interpretation, the bond market will rally. Yeah, this is one I read earlier. Will rally when the ISM number is weaker and fall when it's stronger than expected. Equity markets prefer labor interest rates, lower interest rates, and could rally with the bonds. However, a healthy manufacturing sector indicated by a rising ISM index levels bodes well for corporate earnings and is bullish for the stock market. The level of ISM manufacturing index indicates whether manufacturing and the overall economy are growing or declining. Historical readings of 50% or above are associated with an expanding manufacturing sector and healthy GDP growth. Overall readings below 50 indicate a contraction. So, yeah, that's what I was saying before. And I was like, it's 50 or higher is good for GDP. So, again, this can be taken as what the Fed is doing is working because they expected it to be right at break even and it's slightly above break even. So it can be interpreted as what the Fed is doing is working. So the Fed gonna stay full steam ahead of raising the rates like aggressively, and that could be looked at as a bad thing, or it can be like, hey, what the Fed is doing is working, and it can be looked at as a good thing. So and look like it still ain't giving no kind of entries because we still melting off. Still melting off with no real. See these 2-minute candles right here. See, we didn't even see right here how we didn't even get back up to that breaker. We didn't get back up to that these 2-minute candles, but we didn't get back up to that 15-minute breaker. We didn't get back to that 2-minute fair value gap. It ain't giving like no clean entry of anything. We did. I can't say this 5-minute. We did get back to this breaker right here. We came back to the 5-minute breaker and we sold off. So we did and this right here, this is just a trade. I had already said this, I couldn't take this trade because we had this 15-minute breaker above it and we had another 5-minute breaker up here. But the trade off this 5-minute breaker right here was the trade. It just wasn't what I was willing to risk or take because we hit that 5-minute breaker and we sold off mammy. And you already saw the reason why I wasn't willing to take it because we had other PDAs above it. You know what I'm saying? And I don't like taking trades on the bottom PDA when we got other PDAs just above, especially of a higher time frame. But hey, it's better to miss a trade and sit on the side than to jump in and get your head get clippity clap. And plus, I'm primarily a swing trader anyway. I dabble with day trading, but I'm primarily a swing trader. And so what is you doing? ES, let's look at what you doing, baby. What is you doing? Man. Now, remember yesterday I was like, we setting it up like we trying to make a low on Tuesday to take off. It looked like they might be still trying to sneak that in here. We went up here and took out this gap, took out this buy side liquidity. Now we're pushing back down. Looking like we're trying to make a weekly low. Look like we're trying to what's up, Pecan? Look like it says sent me a wave. Look like we're trying to make a weekly low coming down to this hourly fair value gap down here, and then this daily order block. Go ahead and melt all the way down. If we melt down to this order block right here today, I ain't gonna hold you. I'm gonna take me a swing off this. If we get down to this daily order block right here at this equilibrium, I'm taking me a swing off of that to the long side, because it bodes well for a long swing. It bodes well for a long swing because looking at just the price action overall, and I'll break it down. Why? Because looking at the price action overall, we came up. We're on the buy side of the buy model, right? We're right across from somebody said no retracing site. Right, we're right across from this bearish order block, right? We got a bearish order block. We come up, we hit the bearish order block, and now we're pushing back down right off of this bearish order block. Now we got a bullish order block on this side, so we come down to this bullish order block on the market maker buy model. When we hit this bullish order block, boom, the bounce. So you got the rejection off the bearish, come back down to the bullish right there in close proximity, like directly across from it, right? And then bounce off of it. That's the technical aspect of what I'm talking about. If we get down and then we come into and see this kind of stuff I hate, because sometimes it'll come to the wick on you and bounce. I like to take it off the body. Let's see, we're coming down. If we come down here to this body, we need to get, if we get down to that what's the name today? I'm looking to take me a swing off of that. But this the way we melting down, I can't say that was the look at this right here on the 15-minute. I ain't giving up nothing. Just took out this sell side liquidity on the 15-minute. Ain't giving up on the 15-minute. Ain't giving up no kind of retrace. We did get a 5-minute retrace back to that break. That breaker. We went back to that 5-minute breaker right there. We did do that. I came up holding and say, hey, we didn't get no kind of entry. We did get an entry right there. That's the entry that I was talking about that I couldn't take. You about to go? Yeah. Hey, I'm about to go, y'all. I see y'all at 6:30 tonight. I'm gonna walk my sweetie out and go pay my bills. I see the question. Sorry, I mean the stuff in the chat. Sorry, I ain't get to it. But I see y'all. Yeah, come on. All right. Morning. And stick your head in a little bit. There you go. What am I in? Oh, come over. There you go. Good morning, Spidey. With the cheese in my hand. All right. I'll see y'all tonight at 6:30, man. Trade safe. Gone.